where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight, we're going to talk about the collapse of oil and what this means for the Fed, and as the markets are front-running the Fed. Let's get into tonight's video. Welcome, everyone. Well, we had a very exciting day today. Looks like the oil market is trying to front run the Fed from the standpoint of the inflation, or maybe we should call it deflation, on the way. What a turnaround in oil, right? We go from basically $80, 79 and change, to 64 in a couple sessions, big outside reversal bar. I'll go through all the details. But what we're looking at here, I think, is sort of interesting. We're seeing the markets on the S&P coming very close to printing an all-time new high, which is, I believe, right at 61.66 is the number I have marked. And we're trading right now at 44.75. We were up a little bit more in the 50 handle earlier today. So once again, those trades, the breakout trades and the trades out of the data sheet last night that I showed you were really good trades. So hopefully you folks are capturing those. And if you're not getting the Substack, you should get it. kendallreport.substack.com. $8 a month. And you can buy it until for a couple more days. You can get an $80 deal for an annual subscription, which is like $6.50. So get that. Just a couple of days left on that. I think you can upgrade your monthly account too. You just have to log into your Substack account. But this has been pretty phenomenal couple of days here. Right when we came in thinking on Sunday night that we were going to be looking at some disaster situation. A couple of days later, after dropping the first bomb, of course, Trump actually dropped another bomb today, which was a pretty big bomb that he dropped. It was the F-bomb, I believe. And he wasn't very happy with Israel. And I think he's basically got some words for Netanyahu and what he's doing there. I mean, it's just kind of ridiculous. Irresponsible, whatever you want to call it. Anyway, so to the markets, though, markets are buying it. I feel like the oil market's doing more than the Fed could even think about doing. Of course, we saw Powell talking today, Trump trashing him again, calling him an idiot, which is starting to look like he is. And it looks like the Fed is really getting behind the curve again. I told you this going back maybe 2 Fed meetings. He's not going to do anything to help Trump. His job's over. He knows it's over. The Fed is totally irrelevant, as I've been telling you. They've got nothing to do with anything. And in spite of that, not wanting to lower interest rates, it doesn't matter. Markets are rallying. They're buying into the Trump scenario, and that's how it's going, and that's how it's going to go forward. It looks like, and then we have all the, everybody. I don't get it actually. Without verification, the typical liberal rags are out there telling you, well, they didn't really destroy anything. They dropped 6 of these monster bombs, but it didn't actually do anything. That's always interesting, even though all the buildings are gone and who knows what it looks like underground. But anyway, we'll see what comes out of this thing. Evidently, Iran thought it was enough to go with the ceasefire. So anyway, a lot of rhetoric around the markets, but meanwhile, they don't care. And I've told you this before in the last several days, that the markets don't care about these geopolitical events. I did a lot of research when this thing happened a couple of Fridays ago, and there was no response. Like I told you, the only one that was elongated at all was the Gulf War, which direct involvement by the U.S., not dropping a couple bombs and going home. Not that. That's not what we did in the Gulf War. So that was a much bigger deal in occupation of Iraq and the whole bit. So much different. But none of these things, assassinations of Sadat, I mean, you can go through all, I did go through all of them, and nothing, no effect whatsoever on the equity markets. And that's specifically what I looked at. So we saw everything reversing, the crude oil getting hammered. I'll go through crude oil here in just a few minutes. I'm going to try to get through this broadcast fairly quick tonight and just try to wash through it pretty quick. I think we need to see some more market action. I'll bring up the data sheet, so we'll see what kind of trades are coming out for today on the S&P. And I will post, if you're not following me on Twitter, then I'm at Portfolio Expert, and it's no E in the expert, it's just Portfolio and then the X, okay? And so it's Portfolio Expert at Twitter. So follow me there, and I'll put out this sheet that I'm about to do here when I finish the broadcast. I'll put the data sheet out right now. I'm going to go ahead and put that out there for free. I show it every day, but you'll get all of those if you sign up for the newsletter. All right, so let's talk about what the options are for the Fed. I think there is a July meeting, and maybe if somebody's on here and you know there's a July meeting, if you could let me know. I've meant to verify that before, but they're not going to do anything in July. And Paul made that clear in comments that he's made recently. Is we need more time to watch things, even though crude oil prices are plummeting, which are absolutely a core element in inflation, right? So we'll probably go negative. We'll probably get deflation, and then they'll start dropping rates, and and we'll see where it goes. I've been sticking with the story that I've been telling you folks. Expectations for slowdown in Q3, and maybe all those things will come off the table. We'll see. I just don't see, even though the markets are trading up where they are right now, I just don't see the economic backdrop, and I've said it before, and lots of people have, is the markets aren't the economy. So we literally could see the markets going into slight new highs and not see any economics that are backing that up, except for crude oil dropping like it has. So just checking, I was just checking the database a few minutes ago. Let me bring that up and just to see if that has updated yet. Yeah, it looks like it has. Let me check one more value here. So we'll go ahead and get into the data section of tonight's broadcast, but it looks to me that the Fed's behind the curve again. They probably should have. They should probably consider lowering rates, especially after this oil collapse. They're going to have to do something after that. And the interesting thing is the economics and the labor and everything else is still supporting the market. So the crude oil isn't dropping because there's no demand. I'm not an oil analyst, so I'm looking at the technicals, and I'll just go and lead with that tonight. I'm probably going to try to look at some of the longer term impacts here, especially since we're at the last couple of days of the month and also at the end of the quarter. So one of the things I'll discuss when we get into talking about the S&P and the indices is we'll talk a little bit about any window possibilities of window dressing to come in. So we'll see what that looks like. So let's go ahead and go to the database. So as we look at the database, we actually upticked a little bit. We got about 1,108 new buys. we've got about, looks like maybe 300 and change exits. We moved back up from 69 to 71%. So 68 is kind of a number that I talk about on the database from the standpoint of the stability. 68, 72 is a range. So we got down, trying to get down to that level. We got to 69. I still would like to see more of a rotation happen here, even though we're kind of printing up to new highs, getting close to it here. We got a bump in prices here just right before as I was coming live. So that is definitely looks like there's still a lot of buying interest out there. When I show you the data sheet, we're still very positive and getting more so as we break down. But the database still 71%, nothing going on there. We're looking at some of the indexes that were long, some of the sectors. We're still very long in the tooth here on the sectors. You can see, let me just zoom out. So we got basic materials, capital goods, consumer non-cyclical. Those are all long in the tooth. And then at the very bottom, we got services, and services is 36 of 40. So everything's starting to get long. Doesn't mean it has to stop. They can extend. But I'm hoping, I think it would be very healthy for us to get a decent rotation here and see the short-term database get back to 62, 58% would be really good, especially if we're going to get any kind of sustained move. And we're printing right now 53% on the intermediate. Let me just bring that up just real quick to bring the value up here. Yeah, so 53.29% bullish on the intermediate. And that means, 50% of the stocks are in trend mode again. We were down at low 20s, and we got back to the 42%, and now we've got solid foundation here. And as I've told you before, one of the key elements that's important here, if I just bring up this section here of the database, is this duration. Once we get on the optimized weekly, 207 days is where let me zero in here. This is where the weekly optimize is 207. Right now we're 60 days of the, 60 days is the standard D. Right now, we're only 32 days into this cycle. So we have 34 days into the cycle. So there is a ton looking forward, like 6-7 months. So it's getting me to question a little bit. We'll see what kind of metrics we get out of the economy, whether we're going to see any softness or not. We may just have this stagnant environment that we're in from an economic standpoint, and markets may continue to chop around and have a slight bias to the upside. So let's go ahead and get into the S&P. S&P here, we keep crawling up this ladder here, and we're seeing we're getting up to the right here at 61.66. If I zoom out, over here was where the high was, and now we're very close to making an all-time new high. But the problem I have with this configuration is it's still rolling, and we're going to get at. We spent the last 3.5 months getting to the new highs, so we're really, in my opinion, has just established a very broad trading range, and we've been going through one of my favorite terms. This is the creepy crawler. It just kind of moves up gradually. There's not a lot of momentum in it. It's very flat, but still with a bias to the upside. And these type of rallies can go on for a very long time. I know I have a much different take than a lot of folks do as far as volume goes. I have different I guess, beliefs or things that I've discovered off of volume. I love low volume grinding trends. They can go on forever. It's when you start to get big volume. Big volume doesn't equal more of the same. It actually, a lot of times it means that there's a climactic situation happening. So you get a big spike in volume. If you got right now a big move up in high volume, that would probably be a capitulation point, and it'd be what I would call a flush more than a bullish moment. So you would not want to see big volume up at these levels, as that will be a bit of that capitulation. And what we did get the big volume was on that big 11% day. So I knew we'd established a low, and it looked like, we talked about the 200-day when we were below it, and then we hovered around it, came back and retested. And I think ultimately we will come back into that valuation. And I'll go into more of that as we get into the first of next month. I'll do my typical long-term view of that. So let's go ahead and take a look at the data sheet for today. And the data sheet is 80% bullish continuation. So definitely a continuation. Bullish breakout. I don't think I updated this. It looks like a cycle position above RXT. I don't know if this updated properly. I didn't have a chance. I kind of threw it out there. 60, 90. Yeah, I'll have to take a look at this sheet. Let's take a look at the, here's the buy continuation. 60, 90 is an entry point. Already missed that one. This looks like this is yesterday's sheet, folks. I am so sorry. I'm just looking at what's coming up here. Yeah, okay, all right. No, here, it's the right sheet, okay. I just haven't looked. I didn't get a chance to review this before I came live. So here we go. 90% 58, we're at 46 right now. 40 is a 95 chance. We've already rallied above that. There, it's showing, I must have made this sheet before the rally, or I don't know what this, it's showing current value at 60.90 here. Yeah, so let's do this. I'm going to double check this sheet. I'll come back to it. So let's go ahead and go back and let's go to the NASDAQ here. I'm not sure if that sheet, I'm gonna have to take a moment of focus just to get that to come out. But this is interesting. As we look at this sheet here, is the red dots are starting to forecast lower prices. Even though we're moving higher, we're getting massive divergence here. And this is that loss of momentum that I've been talking about. So I think we'll come into these values. I still, even though we're printing a new high here, I think we're pretty close to some sort of rejection. And maybe if crude oil keeps going down, maybe that will bring in that disinflation or type mentality in the sentiment that's out there on the street. But this is interesting that the forecast is coming in, even though we're printing up and we got an upward channel going right now. That's suggesting that we're going to come back into the moving averages. Like I've been saying, there's no VIG. There's not a lot of momentum that is suggesting the markets are going to go a lot higher here. So just know that we're looking at the, I'll zoom in here just a little bit, that we're looking at this thing stalling somewhere in here. So while that's been my scenario I've been telling you for a while, is that we'll probably see the market stall. So let's talk about what we're going to go forward here with the rest of the show tonight. Will be, let's go through, I'll do crude oil, gold, and Bitcoin, and we'll see what kind of questions you folks are throwing out there, and I'll go through and answer some questions after I go through those markets. Okay, so let's go ahead and let's do crude. I think this is pretty phenomenal what we're seeing here. I just I want to see if I can get the market grid off for just a minute. I want you to just be able to see this those bars here. This is pretty huge, I think. And look at this. Look at this reversal bar. We completely, if I put this on candlesticks, this is a big engulfing bar, and then you get the follow through. According to this, we got a lower close today. If we can take out, this is going to be a tall order. If we can take out this low over here, 64 even, then we will continue to possibly see 2 more days down right into Friday. We're coming into this 40 period moving average that's right here, and it looks like we've got a pretty good shot here at probably holding in this value. Let's take a look here. Let me do something so I put that back on. But we can see we got, it's interesting, this thing is still climbing up. So I think ultimately what we end up doing is stabilizing right in here around this 40 period moving average, and crude oil starts to come back in probably toward this, we'll call it 66, 68, back to the bottom side of the 200-day moving average. That should be the most likely scenario out of this pattern. We have the 10 rolling over the top, so we should start to get a little bit of a compression over the next several days, because what we did do is get this one of those volatility bubbles on the downside here. So we're going to have to normalize before we'll get any movement. So looks like the 40 will be the floor. Right now, that value, just to give you a value on that, is 63.60. So that'll be your bottom value, and we'll probably stay below the 10 and below the 200, which will put us around that 60. We'll just call it rounded off to around 67.5, 68. We should come back into that range. So it looks like this market will stabilize here from that standpoint. So not much more than that, but I did want to make sure I cover it tonight. Let's go ahead and do gold. It's kind of in the same scenario here. Gold came down right to its 40. It's the same similar type pattern, and you can see it's interesting. Red dots are showing a move back up, and this is typical of the algos here, as they're reflecting that echo bounce. And we should see, let's see what the PPMs look like. Stable. PPM 2 and PPM 3 are trying to come in there from that standpoint. The interesting thing is we did get some new fib targets down at the bottom here, suggesting we could go to the 200, which would be, I think, very unlikely, especially with the PPMs not confirming this move. We're really looking at the pattern stabilizing here more than seeing this big downward, but I do have to mention it. A lot of times we don't think it's going to hit there, but that is a target right now. Let's take a look at those values real quick. Those are 31, 51, 3,027, 2990. I think very unlikely, and that 200 is 2917. So that would be very unlikely we'd see those numbers. I think let's go over to a quick look at the weeklies here. Yeah, so you can see the same thing with the weekly. We should hold right around this 10. I've told you before, if you see the 10, you want to buy it. We had a little bit of a discount to the 10 week. When I say the 10, I'm talking about the 10 week moving average here, which is currently at 31. Let me make sure I get it right. Yeah, 31.71. So that's going to be I'm going to get your right value. 33.29. That's the number. So 33.29. We've been 33.08 low here on the weekly, so we're just below that. So we're getting a little bit of a rebound coming up. It looks like the algos are suggesting potential V bottom right here. So, and the red dots are also projecting we're going to stay above that 10-period moving average. So that still is going to be a good point to enter in or to take a position here for this longer term trend. And I've showed you this before. This is a huge parabolic trend that is unfolding here, and it's not likely to end anytime soon. All right, so let's go ahead, getting a bit of an inside bar here on Bitcoin. The other day I mentioned anything down. Let me go to the daily. There was a really good forecast. That fib target right here was at the 99,000 level. I told you if we got there, that was going to be your buy point. We basically reversed out of there, and now we're really coming back in. If we look at the algos, everything's flattening out again. So stability in Bitcoin going forward here from the standpoint of the short-term trend, and the intermediate trends are still bullish. Let me just bring that back up here. Yeah, still very bullish. We got a 2.0 on PPM1 and a 1 plus. So anytime you get a whole integer, remember 0.25 is a trend. So right now we're at 2. We're 5 times, 10 times that amount. So it's a very strong uptrend, and that 10-week moving average here is going to be also the point where you want to be buying against here in this pattern. Okay. All right, I'll come back up. Let's take a look at some of the comments. We should be able to get out of here fairly quick tonight. Yeah, it's interesting. Thanks, Mike, for that. China just finished building a rail to get Iran oil 2 weeks versus a month by sea. Yep, there you go. Yeah, so there's no way, just so you know, if they try to close the Straits of Hormuz, that'll take 2 days to clean up. We've got so much air power and stuff there, we can clean that up in a heartbeat. They're not going to be able to hold that down. Maybe a week or two just trying to figure out how to clean it out, but that's not a big deal. And if it would also, so maybe they have a way to get their oil now. If that's true, what Mike's saying, then that would open up. But then it doesn't hurt anyone else. They're not using it, so there's no point. And I think if they try that, they're not going to want. Like I said, I think the U.S. could reopen that in a heartbeat. I don't think that's a big issue there. Just my opinion. Yeah, I think there's a lot of back channel deals that Todd is talking about there. Just looking at some comments here, folks. Bear with me a second. Yeah, society's not in a good place. I would agree with that, investing in gold, Bitcoin. Our job is to figure out where the cash flow is going, and that's definitely where it's been going, and in equity markets. So don't forget that. Equities have been hot since the Liberation Day, right? All right, let's see a couple other comments here. Yeah, I kind of feel like we're going to see some of this economic weakness start to show up. All right, just let me trying to get to this. It's pretty small, so I got to blow it up. Yeah, so I saw some reports that the more euro dollar investments, but it makes sense. Um, 1 second here, just reading through a couple. Yeah, so cheap oil is bullish, as long as cheap oil isn't coming around because of economic weakness, right? So if there's demand is down, oil's cheap, then that's not necessarily good. So it's just not oil down equals bullish. Certainly, it's been interesting these last couple of days, but I think it looks like, as I covered a minute ago, that we'll see some stabilization there. We're not going to see anything continue to fall apart. I mean, it's kind of already hit it basically went back to where it was, right? Back into that 68, 72 range. That's where it's been stuck. That's a value. It's interesting because interest rates and oil and certain commodities like that are major players, the markets are so big they tend to get range bound. So you can, when you're trading them, you very seldom get any really big trends unless there's some more material event. But right now, there's really nothing other than maybe the fear element came out of the market for a couple of days. But I think it'll stabilize from there. So let's just see what somebody just made a. Yeah, Alex is talking about a. Okay, yeah. Yeah. So, yeah. Yeah, it makes me, yeah, anyway. Um, I think I'm just looking, there's one more comment I wanted to dig in a little bit more. Yeah, I'll have to find out. Yeah, I'm just looking at a couple comments here and just thinking about a couple of things here, folks. So bear with me 1 second. Yeah, I remember the negative $20. I always wonder if you'd have just went in there and grabbed that, but that was a gazillion% move from negative to, from $20 to $40 a barrel. That was an interesting trade if you got on it. Anyway, yeah, folks, I think that'll do it for tonight. Make sure you get the Substack. If you don't have the indicators, get those. I will, hopefully, we keep struggling with a couple elements with the logic on this stuff. All right, folks, thanks for watching. I'll see you tomorrow night. Have a great night.